Are those okay to move forward?
No changes here.
Okay. Those will be approved. Next up, Bill, for the July 2022 sales tax update.
Great, thank you. Good to see you all. So just a quick update on sales tax. For the month of July 2022, our sales taxes were up 5.4% compared to July 2021, so compared to a year ago. Sort of continuing up the trend that we've been seeing. Looks like the economy may be slowing down. The 5.4% growth is the smallest amount of growth we've seen so far this year. That stated, I will say there was, when we're comparing back to July 2021, July 2021 was a very strong July, so that does make it a little bit harder to improve upon. And I did also note that there was one particular large payment that we received in July 2021 from an IT company. It looks like they probably made a large sale, probably to another company. If I excluded what I estimated that payment was, so in essence, instead of taking the number we actually received back then and I put in their sort of more average number, growth would have looked more like 8.4% this year, minus that one, what we call it a variable or very one-time looking payment. So I don't want to overreact to 5.4% because it is, again, several percentage points lower than the lowest month so far. It's still positive. And I guess as a final message, we are still up almost 20% on where we thought, sorry, not 20%, $20 million higher in our sales tax than we projected to be for budget purposes. So we're still in good shape, but we are again seeing declining growth in sales tax.
All right, appreciate that. Are there any questions from the committee?
None for me.
No questions.
All right. Thanks, Bill, for the update. Appreciate it.
Thank you.
Let's see. Next up, I don't know if Nancy or Marcy's going to start, but next up is the scope of work on the review of nonprofits. Just for a little context, we talked about this item previously in this committee, and so kind of the purpose of this discussion is to review the proposed scope of work for the audit that we agreed to, and then if there are any changes, make those changes, and then that will kind of be the plan that the outside audit firm follows. So I will turn it over to Nancy.
Thank you. And like you said, yeah, we have talked about this previously, and we were asked at the last, I think it was the June Management and Finance Committee meeting, to come back with an outline of these agreed upon procedures for you to review and make your suggested changes to. And just wanted to let you know, staff compiled these procedures. They're our procedures. And then the external auditors, they reviewed and just confirmed that they would be able to perform these. And one of the key things is that in order for Forbes to do this work, the procedures have to be very specific and allow the auditors to make really an objective call on whether or not the nonprofit meets the requirements as outlined in those procedures. So it can't be something where they would use a lot of judgment in order to determine whether or not the nonprofit met the requirement or not. So basically, we just need some feedback today, and then the plan would be to finalize the procedures, get a price quote, and then ultimately move forward with the engagement.
Well, I guess why don't we start with Councilmember Murillo? Thoughts, feedback, comments, anything on the proposed scope that was included in our packet?
Yeah, I guess I think on a high level it looks right. Let's see. It sounds like it's mostly, I guess, just to be very clear, the scope looks like it's mostly focusing on an audit as it relates to federal grant dollars, or is it more robust? I just saw like a specific kind of carve out there. But could you clarify that a little bit?
And yes, so the carve out was really, we're excluding all of the dollars that are coming to the city that are either federal or federal pass-through. And the issue with the federal money would be that since those monies are already under the single audit, and Forvis audits us, they do that single audit, they would basically be conflicted and reviewing their own work. So we're
Gotcha.
excluding all federal dollars. So it would be everything other than federal, and it would be any kind of money. It would be other grants, other donations. It could be general fund money or other types of city money that would be reviewed.
Perfect. Okay, sorry, I missed the operative word being remove in that first sentence. That makes a lot of sense. I would say, as part of that audit, are we going to also audit like let's see, like which departments are, I guess, are being funded by. Okay, so we're gonna keep track. Obviously, we have like the part of the budget there. I guess I just want to be sure as they pass through, we're clear on, people ask us about city spending, where do our dollars go? Obviously, not all of our dollars are from us, but yeah, I just wanted to make sure on that one. But it sounds like
Yeah,
that's
we
a
would
yes.
definitely have transaction detail that Forvis would look at, and it would show the departments, the various departments that are basically taking that money and then spending it in whatever way with the nonprofits.
Gotcha. And are we letting folks know that we're going through this process? I guess I think of like the smaller organizations that might need some time to kind of, prepare for an audit, for example, like that can be a very time consuming process. And I guess I just want to make sure that folks have enough time to prepare to give us the information that we need from them.
Well, I don't think we'll know until the AUPs are started which nonprofits would be selected. But I would imagine that some sort of a memo or a letter from the city would go out to let them know that they are expected, to comply and provide information back. So
Gotcha. I think that's it for me, Councilmember Gardner.
Okay. Councilmember Zvonek, any questions or feedback?
Yeah, just one question. I know that, and I think this came up when we were talking about youth violence, that sometimes we get requests from newer nonprofits that might not have been around for all that long. And so I know there's a requirement for an annual 990. A lot of nonprofits will do that every 18 months as opposed to 12. Are there things that we can request if it's one of those newer nonprofits that might not have yet filed the 990 that we can request for them with that same information? Because I don't want to get into a position, and I think that Councilmember Murillo mentioned this last time, is that some of the smaller, newer ones, I don't want to exclude them in the future from being, eligible for grants and or be a part of this audit process simply because they haven't yet filed the 990.
I think that we would be able to make some calls as city government and the committee regarding that. What Forvis is doing is just going through that list and saying kind of yay or nay, did they have it or did they not? And then we will take that information, city management and again, the committee, and determine, what does this mean and where do we want to take this from here?
Okay, thank you. That's all I had.
All right. Marcy, is there anything you wanted to add? Okay.
No.
Okay. So with that, are both council members okay with moving this forward?
Yeah.
Yes.
All right, this will move forward. Thanks, Nancy, and thanks, Marcy, for your work on this. Appreciate it.
Sure.
Let's see. Up next, Nancy, looks like you're up next to talk about employee retirement plan options.
Yep. So at a prior Management and Finance Policy Committee meeting and also prior council meetings, council members had voiced a desire to see more choice concerning what retirement plans that an employee is able to enter into. So the committee was asked staff to explore possible options that would offer more flexibility to employees. So staff reached out to our actuary at Milliman, and we received a quote for a study that would basically look at different projection scenarios. And this assumes allowing new employees only the choice between going into GURP or going into a DC plan. And the cost estimate for that study was between $22,000 and $27,000. So really the question is, does the committee support moving forward with an actuary study? And this study would look at various scenarios, assuming a percentage of employees would choose the DC plan over GERB. And then staff would bring back the results of that study for this committee to review, and then we would do next steps from there. And we also have our outside legal advisor, Jessica Culati, on the call as well, and she can help answer any questions that you may have too.
All right, council members Zvonek, any comments?
Yeah, I just say I support the idea of doing the study. I think that having that flexibility of choice between a DC or a DB plan is beneficial. I do assume, having worked on this issue with para, that there's always some concern that the more people that opt out, there's fewer people paying in. And I believe, especially if there's an unfunded liability, which there is, but it's small. I know there's a transition cost, so I think that as a part of that analysis, understanding what it would take to make sure that we, fulfill the obligations to those who are already we've committed to, but still allow that transition to happen. Because I think long term that transition is an important one to be able to make.
Councilmember Murillo, any feedback?
No, I still support this moving forward. I want to know more about the cost to kind of be able to offer both options to our employees.
Okay. Well, it sounds like that will move forward. Nancy, appreciate your work so far on this, and keep us posted.
Okay, will do. Thank you.
Thank you. Up next, Greg Hayes, changes to service fees for 2023.
All right, thank you very much. This is it. You've made it to the most exciting thing that M&F gets to deal with every year, looking at the service fees. As part of the annual budget process, departments review these service fees to determine which fees need adjustments, elimination, that sort of thing. All of this is part of the annual budget. So anything in here is part of the annual budget. In addition, the service fee process continues fee indexing. We've been indexing since 2007. We use the employment cost index for state and local government compensation for the vast majority of our service fees. This year they increased by 3.2%. In addition, we also have the impact fees. They have their own indexing. Each one has their own indexing one, and they're in there as well. This year is a little bit different in that we've been working with consultant Wildan to take a more detailed look at costing of fees. You're going to see a little bit of some in here where it says choosing Wildan's number, that sort of thing. Several of the fees were adjusted for their numbers. The vast majority of these fees, and we've got 1,300 lines, the vast majority of these fees were already in the ballpark of the Wildan recommendation, which to me I think is good news. What it means is that they have this magic that they did. This magic spreadsheet, really quite something. I made Fernando and Jackie come in and learn it with me, and all of us were just kind of shocked by it. Their magic and our indexing both came to the same number for the most part, which I thought was good news. And then we allowed departments to choose whether to follow the recommendations or not. In a lot of ways they did, and most of the ways they were already close to begin with. I'm going to give you a couple of examples, just examples of where a department didn't and why they didn't. Both of these happen to be in Housing and Community Services. In their animal licensing, they have $15 for altered fees and $50 for intact fees for licensing. Wildad said $151, and so they went, no way. There's no way that people would license their pets if the cost were that high. So that was a place where we're fine. That's great. But then on the other hand, abatements. We have a rising cost for second and third abatements. Wildan said same cost for all abatements. And without using naughty words, they actually were very professional about that and said, well, the increase from the first to the third abatement is an escalation of fees to encourage and incentivize the property owners to take care of their property. Right. So we chose not to do that. Two changes in the service fees that came out of the Red Tape Reduction Committee. You'll notice that amusement device vendor fees are in finance are now out, and we're now a fine-free library in the library and cultural services. Most of these, and just as a high-level summary, most of the fees were indexed. Of the ones that were not, I didn't count each one, but there were 15 bullets of ones that were less than the index, there 8 bullets of greater, and there were more fees that were eliminated than were added. So with that, I've gathered some of the greatest minds of the city if you have any questions. I also added a few of the not so great minds just for fun. So if you have any questions, feel free to shout them out.
Yeah, appreciate that, Greg. I want to, yeah, thank you for pointing out the libraries. I know council previously looked at that, but just kind of exciting to see it in writing. Two questions. One is on the Great Lawn use fee. Can you tell me what that's for? And I mean, are there First Amendment issues around allowing or making people to pay a fee to basically use a public space?
What department is that?
Parks and Rec.
Parks and Rec. Do I have somebody from Parks and Rec?
Hi, Tom Tully with Pros Business Services. That is a fee that we've always charged. We just never memorialized it. So that's what this is.
Okay. But it's for like, I don't know. Well, I guess we wouldn't. Well, do we charge the city for Global Fest, for example, or is that the type of event that we would charge this for?
Not necessarily Global Fest because that's a city event, but if it was a non-city event, yes, we would charge.
Okay. And then my other question is on greens fees for golf courses. Is that purely based upon an index, or do we kind of take into account competition from other courses and that kind of thing?
You got that one?
We absolutely we've surveyed the Denver courses in particular, and our prices are competitive with theirs. And we do have increased costs, so we kind of index with them a little bit and then try to cover our costs.
Okay. Yeah, it stood out to me because like the 18-hole rate for Saddle Rock is, pushing almost $100 for one round. So it's getting pricey, but I guess golf's expensive. So, Council Member Murillo, any questions or comments?
I was wondering who the great and not so great minds were that Greg referred to. But no questions, but I similarly, prior conversations, the fees for pit bulls and restricted breeds, I saw that was removed as well. I know that impound fees as well. So, just some observations, but no questions.
Okay.
Councilmember Zvonek.
Just so many lines of fees. Overall, Greg, because you've been doing this for a long time, and I trust your judgment on a lot of this. When you look at the fee increases that we're looking at in some of these, and I'm sensitive to them because, as Councilmember Gardner, you talked about golf, and I know that golf is a luxury sport. I get that, but there are fees that real people are paying or complying with here that are going to impact their life. So as you look at the increases that we are making, I mean, are they in line with what we've seen historically? And what is the net increase of all of these fees? I mean, this is one of the things, again, that's unique to Colorado, is the way we use fees as a way to avoid Tabor. I mean, I'm not suggesting that these are all of that, but it's a reality. And so I just am curious, like, what is the net increase of fees here?
I would say, and I don't have the number, but I know anecdotally over time, this is the increase that we saw, the 3.2% increase with the employment cost index for state and local government compensation is probably, I'm going to guess, a little bit low from because if you think about it, it's government compensation, it's people costs. That's what most of our fees cover is, the service that whatever person is providing. I would guess that a lot of places are going to go up, and we're probably going to maybe see that next year in terms of an increase. But I would say that for the most part, this is right in the ballpark of what we've seen every year. Everything's in that 2 to 3% range. I would say that the impact fees were a little bit higher, but the story is all out there. The impact fees are based on construction cost indexes. And those construction cost indexes of the last 12 months were higher than the 12 months previous. So I would say that that's right. In terms of a net increase, I would say, I think that we've increased the general fund probably 3%, 5%. There will be some of these where we're increasing the fee, but we're going to now expect less people to come in, maybe something like this. Or we'll keep the fee the same, hopefully getting more people to come in. I don't think that at least in the general fund, all of the revenue that comes from this is about $6 million. And I think that we've probably got about a 3% factor built into growth for that. Now I will say, like, the golf fund lives off of these fees, right?
Yeah.
So they need that increase because, of course, if you read that, their fertilizer, everything that they've got is going up because everything's going up. So I was not surprised at all by these numbers, and I thought they made a lot of sense. Nor was I surprised by the ones who didn't want to index their fees. You know, municipal courts, keeping municipal court fees similar to other area places is normal for the city.
Okay. And we will, and you said we will have this will be a part of a future conversation around the budget too, right?
Well, what's going on is, so at the end of this is more just informative, telling you how the fees are working on. And at the end of this, I'm going to ask if I can go and do the same song and dance to full council. And it'll be in the Saturday workshop, packet. I'll try to get different jokes for that time with that group, if you're okay with me coming forward then.
Yeah, okay, that's all I had. And I noticed in the chat that you put who the great minds were directly to them. So if you look there and you have something, you'll know who he's talking about.
Very good.
Oh, I totally see that, Dustin.
I didn't get that, so huh. All right, appreciate it. So I guess, Greg, then the ask is just to forward this to full council.
Correct.
Okay, are both committee members okay with that? Okay.
Yes.
Yeah.
All right.
Thank you much.
Up next, Steve Shanks, GURP update.
All right. Well, thank you. And I think the presentation I sent you was outside of the regular agenda package. So if you've got that, we'll run through it. Just first page, basics that I'm sure you all know. GURP has been around since 1967 for the benefits of city employees and their beneficiaries. Covers all general employees, but that excludes fire and police and elected officials. It's a defined benefit plan. It's designed to provide a steady monthly income in retirement. It's managed by 7 voting trustees with input from non-voting members of the city, 4 city representatives. The next page, I just showed a snapshot. Each year we get our actuarial valuation done as of January 1st. So as of January 1st, 2022, all things look great. So the actuarial value of plan assets had increased by $76 million. The unfunded liability had decreased by $32 million. The funded ratio had increased to 98%, up from 5.7 before, and the amount of money in total that the city is putting in, the 7% employee plus 7% from the city, is as of 1/1/2022, 2.1% more than the plan would need, projecting going forward with the assumptions we had. So the reasons these things all got better as of 1/1/2022 was a much higher than expected investment gains during 2021. The investment gains were all actually kind of offset by the increases in the cost of living due to inflation and the salary increases with the city. Just moving on, the next page just shows in graphic form the actuarial value of assets getting very close to the liabilities. So getting close to fully funded. Next page sort of shows a history of the contribution rate that the city has put in, that after 2008, the plan needed more, and the city slowly increased from 5.5% per employee, plus a match of 5.5% for the city for 11%. Moved it up slowly to 14% in January in 2017. The 14% has been there, and it's been there ever since. And as of this year, or as of 1/1/2022, the amount needed to keep us on the right path was down to 11.9, like we saw. So that was good. And now the looking at a projection that was as of January 2022, and the last two slides, just to let you know, do show an update from then, because I realize things have changed. But as of the beginning of the year, using our actuarial numbers and assumptions at that point, we were projected to be fully funded by next year. Of course, that included a 7% return on investments, and we'll see a little bit later what we're possibly looking at as an update. So just looking at the next page, that our actuarial liability decreased by over 71%, 32 million, like we saw before. Big piece of that, almost all of that, was or what provided all the benefit was in the investment performance. Investment performance alone would have gotten us to 100% funded, but employee salaries increased more than assumptions, and cost of living also was more than assumptions, brought us down some, but still, we're at 98%. Next page, just to look at the returns that we have had. The top line here is actually net of fees, and that's just to help you see that it's not costing us a whole lot in fees here. Our gross of fees was 20.03 for the year, but here net of fees was 19.9 compared to a target of 17.14. The median for public funds was 12.69. And you can see going down where we've got 16.7 compared to that median of 14.6 for 3 years annualized. Gotten 12.11 compared to 10.72 for 5 years, and 10.37 compared to 9.32 for 10 years. So there has done well in investing with Callan as our outside consultant. And really, after a great year like 2021, even other years spanned together, all years that they looked at were above the 7% estimated return that we use in our assumptions with actuaries. And moving to the next page, just looking at return comparisons to other Colorado plans that whereas for the these are all as of year end 2021. For the 1 year where we were at 20.03, that was the best of the local plans I could get the information for. The 3 year and 5 year numbers, we were second best. Para had good numbers for both of those. So comparing to other local plans, as well as we just saw the median, we've done well with our investment return. And now a look forward of what's happening now. We know the market has had a lot of volatility, and we're running at a loss for the year. The next page, shows like I said, as of the end of 21, where we had great returns for all of those. At the end of the first quarter, our latest 12-month return was down to 10.86. As of the end of May, our 12-month return was down to 2.87. And noting at the bottom that the year-to-date return was a negative 6.2 at the end of May. June was, I don't have that number in front of me, but June was a bad month. So it's down some from there for June, but July was actually a pretty good month. But that just shows you the volatility has continued on. But the last slide, we wanted to give you a flavor of just projecting the year with some assumptions based on what we already know. And so this last slide is just looking at if the return for the year is a -6, and the salary increase is a 5%, the COLA for the year is 5%. And just like, our normal assumptions there, our normal assumption for return is a 7% return. The salary increase is 3.25, and the COLA is a 2.5, are the normal assumptions. So we wanted to give a flavor here for things that we know will happen, such as the salary increase, and our cost of living increase is capped at 5%. So it's not going to go above that, is why we use the 5%. The good news was that if we have a bad year like this, and then we return to our assumptions after this year, that our funded ratio, the lowest it would fall would be 94% as of 1/1/25, and then we would be back at 100% status as of 1/1/2037. So that's assuming one bad year and then back to the normal assumptions. And we know nothing works exactly that way, but that's just to give us a flavor of one bad year won't be a big detriment to GURP. So that's just the brief pieces to present, and I can answer questions.
All right, appreciate that, Steve. Councilmember Zvonek, any questions?
Yeah, a couple. Just for I'm not as familiar with GURP as I am Para. Is there you said there's a 5% cap on COLA? Is there a floor?
We go along with the I'm just losing it. The same as Social Security uses for the increase, and this is for Tier 1 participants. Cost of living is discretionary for Tier 2 participants, which is anybody hired 2012 and after. But those hired before 2012, there's an automatic COLA based on the CPI, CPUW, and there is a floor. There is a floor now. There wasn't a floor at one point. We went negative 1 year, and that wasn't popular. So 0 is a floor at this point, and 5 is the cap.
And one other question: are GURP members outside of Social Security? I assume they are.
No, they pay in with the city, so they do.
So we pay both Social Security. So it's unlike Para, where you're just one. We do both.
Correct. Correct.
Okay.
Councilmember Murillo, any questions?
No questions at this time.
All right. Thank you, Steve. Appreciate the presentation.
All right. Thank you.
All right. Next up, Ryan Lance for conversation on city benefits.
All right. Well, good afternoon, council members. Ryan Lance, Director of Human Resources. Hopefully you can see my screen okay and hear me okay?
Yep. Yes, we can.
Okay, great. But yeah, thank you for this annual update that we provide of our benefits. This will be for our 2023 benefits. It is a line item that's about $40 million of ongoing. So, the annual update for this is really good to be able to present for you guys to see what we're doing and making sure that we are offering the best benefits at and being fiscally responsible with this benefit. So what I'll do is I'll walk through our major ones, medical, dental, and vision renewals. Each year we have to go through a process of getting benefits and renewing our benefits. So more time will be spent on the medical, and then the other benefits are pretty quick. We do have a couple new benefits that I'll highlight at the very end. So we bucket our benefits into three different categories. Our core benefits like medical, dental, vision, flexible spending accounts. We do have employer paid benefits, life insurance, short-term and long-term disability, and our employee assistance program, and then voluntary benefits that are listed there. So our partners, our providers are listed here. Kaiser is our medical, Delta Dental is our dental, and then VSP is our vision. So if we focus first on the medical, this is our largest cost driver. It's also the one that, for obvious reasons, employees really are most important to them. So the medical trend for 2023, that's what the nation industry is anticipating the cost increases are going to be, was 6.5%. So I'll highlight some of the key data points in red throughout these slides. So 6.5 is anticipated medical increase. Kaiser is applying a 3.4% annual increase as a baseline to all of their clients. Kaiser is a medical provider as well as the insurance company. So because they have that integrated network, they're able to be a little bit more competitive with their costs. And hence why they can mitigate some of the bigger increases that some other providers might see. The city's loss ratio, and the loss ratio is the amount that the city pays for Kaiser to administer and pay claims, and we pay that on a monthly basis, versus how much they're paying for claims. Anything that's at 85% or less is going to be good for the employer, for the city. And through March, and that's when the renewal numbers were determined, the loss ratio was 80.4%. So we were running really good. As a result, Kaiser came in with a pretty strong number of a 1.5% increase. And then through some negotiations using our broker, the final renewal rate is a 1.4%. So you can see that's lower than the Kaiser trend as well as lower than the national trend. That also includes a continuation of $150,000 that Kaiser provides to supplement our wellness program. And then there are a couple of required changes. Colorado plans now include infertility coverage. And then there is a negative change. The IRS is increasing the high deductible health plan, that's the HDHP, to a minimum amount for the health savings account. And I'll show you on another slide what that looks like. So our renewals at 1.4% is unblended. So we have 5 different plans. And what that 1.4% was spread out over those 5 different plans. The plans that have higher utilization and higher coverage and costs are seeing a bit more of an increase. So you can see the HMO plan, the triple option, and the DHMO 200 are seeing more than that 1.4% increase, but our high deductible health plan and our DHMO 750 are essentially a 0% increase. So that total premium increase is at 1.4%. And that equates to about $560,000 of an increase. The other change is we are shifting and changing cost share. That's the amount that this employee and the city, the employer and the employee splits. So for the DHMO 200, we're doing a 0.5% increase for employees only and employees plus spouse. That gets us, and then for the family, it's a 0.5% decrease. And ultimately, from a plan design change, we want this DHMO 200 plan to have the employee pay 12% and the city pays the remaining amount. So we'll be really locked in moving forward so that the cost shares won't have to change there. And then the triple option, we're seeing a similar 0.5% increase for 3 of the tiers: employee only, employee plus children, and employee plus spouse, and then a 0.4% decrease for family. And then we'll be set from a plan setup standpoint as well. No changes to the other 3 plans, our HSA, our DHMO 750, and our HMO plan. I mentioned that the IRS is increasing the deductible for the high deductible health plan to $1,500 and $3,000. So what we're doing as a result, since employees are having to pay more of a deductible, then we're going to increase the health savings account that the city pays for, the funding for it. And we're going to do it a little bit more than what the increases are seen from the IRS, and that has to do with just long-term strategy. So on our medical plan, this is available for you to take a look in terms of how our plans are set up. Just a couple of things I want to highlight. Our 5 plans are listed up top. And you can see here that this is the change that's happening. The IRS is increasing the $1,400 of the individual health savings account, our health deductible plan, to $1,500, and then $2,800 for family, up to $3,000. One thing I do want to highlight with our plans is all of our plans. You can look at where our out-of-pocket max costs are. This is really the main criteria we want to look at, or anyone wants to look at. And you can see all of our out-of-pocket maximums are at a really good spot. We have really low out-of-pocket maxes compared to what we benchmark against. And then our plan design philosophy, we want to offer great coverage plans at low cost for employees, offer diverse plan options so people can choose whether they want to pay more at point of sale, or they want to pay more out of their paycheck. And there's different costs and liabilities with their plans. We want to continue to focus on education and consumerism. And then you can see our HSA funding amounts that we're increasing up to the 1,000, 1,500, 1,500, and 2,200. This is a really, really great benefit for our employees. A lot of employers do not provide this much, but the health savings account also kind of parlays into our financial wellness because as many of you guys know, the health savings account is also can turn into a retirement savings account besides just medical upon retiring. So we really want to invest or create a process and a system in place that employees can have another avenue of investing for retirement. The one thing I do want to highlight here is the actuarial value of our plan. Actuarial value is the total cost that the health plan or the employer is paying for the benefit. If you go to the Colorado Healthcare Exchange, a platinum level is 90%, a gold level is 80%, and then a silver level is at 70%. So obviously platinum and gold level plans are ideal. Our actuarial values for our plans, you can see here, we have 3 out of our 5 plans are above 90%, are considered platinum level plans. So that just means our plans are very, very rich in terms of its coverage levels. And that's just great news for our employees. And we've been able to maintain this year after year. And then the last slide on the medical is showing where we're at with rates. This is included in the slide in the deck, so you can reference this at a later time. But I did want to highlight the information on the far right. You can see what the cost impact is for the employees. So you see on an annual, a monthly, and a per pay period, and then you see our plans. So the biggest question that we always monitor on our side is what impact are the new benefits going to cost our employees? And you can see here, just on a per paycheck basis, they're very negligible, and especially considering, again, how rich our plans are. So the dental and vision will go by pretty quick. Unlike Kaiser and medical, we're fully funded. Dental, we're self-funded. We have a rate guarantee through Delta Dental, and the cost that they charge us is staying the same all the way through the end of 2023. And then wanted to highlight that because we have that rate guarantee, there's no changes to costs for employees or for the city. A couple things just to highlight about our plan. One reason why we're able to maintain this, no changes and no increases, is because 97% of all of the claims are within Delta Dental Network. If you go outside of the network, claims tend to be more expensive. So we have great utilization within the network. The other thing I want to mention too is we often get questions from employees that want to increase the benefit for our dental coverage. And our maximum that we pay in a year is $1,500. And sometimes people want to have that go up to $2,000. But only 3% of our members on an annual basis actually get to $1,500 or to exceed it. So there really isn't that justification to increase that benefit. However, the good news is we're increasing a benefit on our base plan. So we have our buy it plan, where a majority of our employees are in, and then our base plan. And our base plan, we are able to increase the preventive service from 90% covered by the plan to 100%. And then on the major services from 25% up to 50%. And the good news with that is those changes are going to have zero impact on the cost to employees. And then we think it's going to be very negligible on claims. So there really is not going to be an increase. And then on the vision, great news for this. Through 2025, we have rate guarantees. So no changes to VSP's rates, no changes to the coverage, and this is a benefit that is 100% employee paid. Our short-term disability, we have some great news on this. This is a fantastic benefit that we offer. We are fully insured, but we are actually seeing a 27% decrease on our renewal rates. So we're seeing a savings of $370,000 on this benefit. And what we're also exploring and likely to do is we're going to use some of that savings to potentially outsource our leave of absence administration. That means that the same company would be administering FMLA. And then if they need to go on short-term disability, they already have the information. So they'll be seamlessly put onto the short-term disability. And then if necessary, go onto our long-term disability. We do think next year we would like to go to advice to pay, and that means go self-funded with our short-term disability. And we think that'll be in the best interest for the city. And just to show you, we were paying $1.37 million for the short-term disability, but with that decrease, we're now going to be at or just under $1 million for that coverage. And we're going to take a little bit of that $370,000 savings to improve our leave of absence administration for our employees. And then lastly, to go over our other benefits, you could see and highlighted in red are the ones we needed to go through renewals, and there are no changes to it. So we're not seeing any cost increases with any of our other line of coverage. We did go to market and to bid out our employee assistance program. We went through an RFP, but based on that analysis, the decision was not to change our vendor, and we think we're in a good spot with that. And then I want to highlight two new benefits. We do have a CARS program out there. It's to help employees. So it stands for the City of Aurora Addiction Rehabilitation Services. That program's been very successful. What we're wanting to do this year is implement a new benefit to be very similar to the CARS program for mental health focused. So for employees that have a need for mental health, they can go through Kaiser to get a referral and approved, and it would be an inpatient or outpatient treatment. And it does have job protection, continuation of wages. It's the mental health treatment, and it's going to be 100% confidential. There's no direct cost impact, so we can actually add this benefit without any type of increase. And then the other one, as you guys might be aware of, is offering a new benefit for free rec center memberships for any benefit eligible employee and benefit eligible dependents. And it provides free membership. There are going to be tax implications for that. And it would require opting in. So an employee would have to opt in, and then they would have to renew it on an annual basis. And then last slide is just our steps. So we go through a very robust renewal process. We have a benefits committee that we work with on a monthly basis. We did do a final presentation to executive management in July, followed up with the final presentation to the benefits committee. We did present this to PACE committee. And then, of course, today you guys are seeing this information. And then for our open enrollment, we are doing our open enrollment earlier due to the Workday ERP implementation. That's going to be October 1st through October 16th. It's a passive enrollment, so all benefits will roll over with the exception of FSA and HSA elections. And with that, I wanted to see if you guys had any questions for me.
Ryan, one question, and you might have touched on it, but I didn't catch it if you did. When is the last time we shopped for a different health insurance provider, or what does that process look like?
Yeah, we did that in 2020 for the 2021 plan year. And we got some competitive bids out there, and it was decided to stick with Kaiser. And that was we consulted both the unions, we had the benefit committee, we had a lot of people involved, and it was pretty unanimous that we were staying with Kaiser. And then best practice is to do that for government, you would want to do it every about 4 years, 4 or 5 years. So we're probably up for it in another couple of years.
Gotcha. All right. Councilmember Zvonek, any questions?
Oh, not for me.
Councilmember Murillo?
Yeah, real quick. In that, I guess, evaluative process, how does, mental health has been a big topic of late, really for a long time, but I think in the public awareness, how do conversations around like mental health benefits get incorporated into that evaluative process?
Yeah, I mean, it's on our forefront, just outside of benefits, just supporting our employees, it's all on our forefront. So everything that we do from an HR standpoint, we consider that piece of it. So we evaluate that across all lines of HR, but with benefit piece of it, it's one of our first topics we have with our medical providers, just to see what benefits they're offering. And every year we take a look at it. It was one of the reasons why we looked at our EAP process to see if there was better and enhanced ways to support that. But that's another reason why we are offering this new mental health program for our employees.
Okay, thank you.
Any additional questions? If not, do we need to take action to move it forward? Is that
This is information only.
okay? All right. Appreciate it, Ryan.
Thank you.
Next up, well, I guess Ryan's up again. Career Service Commission overview and update.
Yes, and this is an annual update that we do for the MNF Policy Committee, and I have our Senior Employee Relations Specialist, Fazaria, here, and she'll do a quick overview.
Thank you, Ryan. Just to give you a quick overview, the Career Service Commission is comprised of 5 commissioners that's outlined by the city charter. It is voluntary, and they serve a 6-year term. The commission will hear and review any type of appeal from a career service employee if they've been laid off or if they've been issued any type of discipline in the form of a suspension, demotion, fine, or termination. And that appeal needs to be submitted to the commission in writing, and it needs to outline specifically why the disciplinary order should not be reversed or modified. The hearings are open or can be open or can be closed to the public depending on the type of hearing. So for example, if it's a sexual harassment hearing, then it'll be a closed hearing. The commission will have the assistance of the assistant city attorney who will serve as the counsel, and the employee will have the option to either represent themselves or secure outside employment, or excuse me, outside counsel. And in 2021 and in 2022, as of yesterday, we did not have any hearings for the commission. Are there any questions?
Are there any questions from either of the council members? No questions. Thank you very much for the presentation.
You're welcome. Thank you.
All right, Katie, ward redistricting.
Hello. So I have Daniel from the planning department, and he's going to be sharing his screen. So we're going to go over the 2023 ward redistricting again. So next slide. We went through our initial meetings, public comment meetings, and then also the election commission did meet on August 17th, and they officially voted on a scenario to be moved forward to this policy committee. There are going to be 2 meetings scheduled for this committee to review and approve a scenario to move forward to council. The meeting on September 27th is only if needed. If this second meeting is not needed for this committee, then we can actually bump up the schedule for council. So instead of having the study session and first council meeting in October, we could go with September and then have the finalized reading in October instead of November. And just to review what we're going to be going over today. So we are going to be looking at the criteria used to draft the proposed scenarios. we are going to review the requirements outlined in the city code and city charter. We're going to go over how the population estimates are calculated. We'll go over the current ward boundaries and population estimates, and then dive deeper into the different scenarios proposed by or drafted by staff and election commission, and the last scenario that was proposed by election commission. And then on the left-hand side, that QR code brings you to the Engage Aurora site that has additional information and the interactive maps if you want to open those up as well. So in the city code and city charter, this is what the requirements are. So it has to be 6 wards, numbered consecutively 1, 2, 3, 4, 5, and 6. They must be contiguous, compact, and contain approximately the same number of residents. If a common boundary between wards lie in a public street or right-of-way, the boundary is placed on the center line of the street. Ward boundaries are reviewed for election years ending in 3 and 9, and it's using the United States Census data and community surveys. Ward boundaries may be reviewed and altered at any time due to significant changes to population or to bring them into conformance with county precinct levels. What that means is if we need to review them because the population shifted, county changed their precinct boundaries, then we can review those in different years other than the 3 and 9. And then the changes in one more. The changes in boundaries of wards may be made by ordinance adopted by council. And it's after receiving the recommendation of the election commission. And this has to be done 180 days prior to any regular municipal election. So here is the criteria that we used. We made sure it was divided into 6 ward boundaries containing approximately the same number of people. We wanted to make sure that sitting council members, of course, are not moved outside of their ward. We tried to impact as few residents as possible and maintain a 5 to 10% deviation between the least and most populous wards. For the boundaries, we used natural or man-made boundaries, and we wanted to maintain the whole county precincts where possible. And then, as I stated earlier, if a common boundary lies between if a ward lies between a public street or right-of-way, the boundary was placed to the center line of that street. And then again, here's some information on what was provided on Engage Aurora. So in the public survey, we asked them if they're an Aurora resident, which ward they lived in, and to give their suggestions for the 2 different scenarios that were drafted. And then they had access to the interactive maps to look at the different boundaries. And the public input survey closed on August 3rd, and the survey results are in the agenda packet for your review. Okay, and then we are going to go forward, and Daniel will take over and explain how the population estimate is calculated.
Thank you, Katie. This is Daniel Krasnowski of the city's planning department. I'm going to go through the math and maps section of the presentation. I'll try to move fairly quickly through them, but I'm happy to pause for any explanations or details. When we last met with this committee, we were talking about calculating a population estimate, which you see on the screen. Is that estimate as of March 31st, 2022. The way that is derived is we start with a known population. That's the census 2020 population, which was April 1st, 2020. Of course, people have moved to the wards since that date, so we had to estimate the number of new population that has moved to the 6 wards since census day. You can see that in column 3 is the estimated population, and then column 4 on the right side is that March 31st, 2022 total ward population estimate. As you can see, not surprisingly, some wards are much larger and smaller than others. Wards 2 and 6 are the largest populations based on the current ward map, while Ward 5 is pretty significantly smaller. This is the current ward map on the left-hand side of the screen, and then that population estimate on the right side of the screen for the current ward boundaries. As you can see, we've got the total population estimate for the 6 wards. The second and third column of that table are how much larger or smaller the population is for each of those wards from our target ward population, which is 67,160. This would be a perfectly balanced wards. It's basically 1/6 of the city population. If each of the wards had 67,160, our job would be done, but they don't. And so what you see in the table is how many people larger or smaller, plus or minus, and then also as a percentage as well. Again, you can see just how much larger wards 2 and 6 are, and how much smaller Ward 5 is from that target balanced population. So in order to bring the wards into more of a population balance, we went through a series of different mapping scenarios. The way these are done is basically moving voting precincts from one ward to another to basically move population from one ward to another, and that adjusts the population estimates. To kickstart the discussion, staff developed 2 scenarios, and these were shared at the series of public meetings that have been held over the past couple months. This is scenario 1. On the left side, you see those adjusted population estimates based on moving wards in and out, or moving precincts in and out of the various wards. Those that are moved are listed on the right side. As you can see, by moving precincts from ward to ward, we're better able to bring the wards into more of a balanced population estimate. You can see, comparing this table with the previous table, the wards are much closer in terms of population. Wards 2 and 6 are actually slightly smaller than that target population, and some of the other ones are closer to that target. The reason scenario 1 was developed the way it was with the understanding that wards 2 and 6 are our fastest growing areas of the city. We understand that growth and new residences are being built today and throughout the year and the coming years. And so this was really an attempt to, I guess you could say, sort of undersize wards 2 and 6, knowing that they will fairly quickly sort of grow into that, closer to that balanced ward population. As you can see, they're about 1.7 to 2.2% smaller, but that will certainly change as people continue to move into those wards. Scenario 2 was just a different take on moving wards around, moving precincts between wards. This was an attempt to really lean into that criteria, which is to affect as few people as possible, changing the precincts on the wards for as few people as possible. Again, you can see the estimated ward populations on the left side. On the right side is the 5 precincts that were moved to achieve that estimate. As you can see here, the wards are much more evenly balanced, within pretty close to even to up to about 2.5%. So these were developed by staff and presented both to the public as well as to the election commission. And from this point on, the election commission went through a series of scenarios to end up with their preferred scenario. And so I'll go through those.
Councilmember Gardner, real quick, can I ask a question on that last scenario?
Please go ahead.
So I just noticed, and it's on the second line, it says Ward 6 to 6 on precinct 317.
I'm sorry, that'd be a typo. It would be Ward, I could look that one up. I think it's just a typo. Trying to find which ward or which precinct that is. So we can certainly correct that. 317 is.
It's probably 2 to something, just based on because it said 6 to 5, 6 to 5, 6 to 5, 6 to 6, and 2 to 1. Maybe.
Precinct 317 is down south of Hamden and east of Tower. So that would be moving from Ward 6 to Ward 5, and so we'll correct that typo.
Okay.
There's not a scenario 3 to share. That's one that the Election Commission put together, but didn't see merit in ultimately. So we'll move to scenario 4, which was developed by the Election Commission. Again, they by moving various precincts from ward to ward, they came up with this scenario. As you can see, again, the population estimates, like in scenario 1, wards 2 and ward 6 are undersized a little bit more than in scenario 1. Again, sort of with the anticipation that those are the quickly growing areas and will grow into that target population. On the right side, you see the wards that are the precincts that were moved from ward to ward. And then scenario 5 is just a very small tweak on scenario 4. You see the map here. This is the one that the Election Commission voted to put forward to this commission as their preferred scenario. You see the ward map on the right-hand side and the population estimates by ward on the right-hand side. Seeing that Ward 2 and Ward 6 are about 3.5, and almost closer to 4% smaller than that targeted population. This was deliberate. Again, the commission wanted to sort of undersize these, knowing that these are growing areas and will in the coming years grow into that target population. My final slide is, again, the population and then those precincts that moved. And I'm happy to field any questions about these. I think the only other thing we wanted to share with you was an online mapping tool that's been available to the public and, of course, to the committee. I can show you all that if you're interested in seeing that as well.
All right. Thank you, Katie and Daniel, for that presentation. Councilmember Murillo, any questions or feedback?
Thanks, Councilmember Gardner. Yeah, I mean, I do have a question. So my question is, what would be a triggering event or like a population threshold that would allow us to kind of revisit? Because I empathize with the, wanting to potentially build in some opportunity for growth in some of the areas. But if we're revisiting every 3 years, I guess I'm wondering how many units, I mean, I'm sure there's a lot of units that could potentially come online depending on what part of the city you're in. But that doesn't necessarily mean that that would happen. Are there certain number of building permits that would trigger a review, or number of units that are in like the development pipeline that would necessarily trigger that? Is there anything like that that we use?
So I can let Daniel follow up with some additional detail, but there's no criteria that states what would trigger us to look at these numbers again outside of the 3 and 9 election years. So that isn't specified in the city code. I believe that is something that would be up to the discretion of the election commission and city council. If the numbers start getting out of hand and they're not, the wards aren't contiguous anymore, then that's something that would be the decision of the election commission or city council. And then I'll let Daniel chime in about if he wants to add any additional detail to that.
Sure, I would just say, Aurora's seen really extraordinary growth, especially in wards 2 and 6, but certainly all over the city. Whether that growth continues at that rate over the next 2, 3, 4 years is difficult to anticipate with a lot of specificity. I think we continue to see a lot of developments being approved and building permits being issued for the eastern parts of the city. But as we've known from previous sort of economic cycles, that can change sometimes quickly. And so it's really a challenge to in thinking too far out ahead in terms of population growth. I think if you're talking about maybe 1 or 2 years, we can feel fairly confident that growth will continue. Beyond that is a little bit more murky. And so really one of the questions that I think we put to the public through the public meetings, and certainly to this committee and to city council is, how much future growth do we want to anticipate in balancing these wards? Do we want them to be fairly well balanced sort of upon adoption and upon sort of that first 2023? Or do we want to anticipate quite a bit of change, in which case we're looking more at will they be balanced 2, 3, 4 years from now, and sort of what that what the communities and ultimately the decision makers sort of where they sort of stand on that question, I think is really kind of one of the more challenging questions, or something definitely that has some discussion and will probably have continued discussion.
Okay. Yeah. I mean, I hear that, and I understand kind of the different approaches. I just wonder, because I think there's a lot of areas in which you could see um, a quick housing increase. I think of the Ward 1 area. I know not in this version or this time around, it being one of the higher populous or populated wards. But I always think of the impacts that like zoning could potentially have in the future. We up zone the district early on into my term, and if I recall correctly, it took Denver about 10-ish years from their up zone to see a boom, and that happened rather quickly. So I think I hear you. I'm clear it's not like an easy answer per se, but I wonder if for the next conversation there might be some additional thought around that. But I appreciate the explanation thus far.
Councilmember Zvonek.
Yeah, one question maybe for Katie, and then a comment. The comment, Councilmember Murillo, this might help, but I understand we have fluctuating growth. The nice thing about Aurora's rewarding process is that we do it every 5 years. The state and federal redistricting happens every 10 years. So you see some wildly disproportionate state legislative and congressional districts because of the point you just made, where you have rapid, unexpected spikes one way or the other. But thankfully, we do this every 5 years, and I think it keeps us a little bit more in line. Katie, question I had for you is, there's a precinct in here in one of the scenarios where it talks about separating a precinct. It's a portion of it. Is that possible? I mean, from an election standpoint and tracking, separating and bifurcating a precinct.
So that actually would be fixing a problem. So
Okay.
that precinct is in 2 wards right now. And if I know some of the other council members will probably remember in 2019 that caused some errors with the county sending out ballots. So that would be putting all of that 302 precinct into one ward instead
So
of
it'd make it whole.
Mhm.
Got it. Okay, that makes more sense than going the other way.
Yeah.
Thank you.
Any other comments or questions from the committee? If not, it looks like Councilmember Bergen is on the phone. I don't know if you joined to comment on this item. If so, would you like to say anything?
Thank you, Councilmember Gardner. No, I was just listening. I think the Election Commission's done a good job, and I'm sure you guys will look at these scenarios and also make a good decision. So, good job, everybody.
So, I hate to defer one more month, but my initial reaction, since we just really got these maps today, other than scenarios 1 and 2, is to take a month to digest them and let other council members digest them as well, and then kind of have a final vote or decision at our September M&F meeting. Are there any thoughts on that, or anybody have any issues with that?
I don't.
No, I support holding off for another month.
Okay. Well, let's go ahead and do that, Katie. So I think you sent the email to all of council this morning with all the different map versions. And let's just have an agenda item on September. I don't think we need a full presentation like you guys gave today. I think, we can just kind of briefly, each of us give our thoughts and then I guess kind of pick a scenario and vote on it. So let's plan on that for September, if that's all right.
Yes, that works. And then also the large maps are up in the summit room for mayor and council to look at. So that it's a little bit easier than looking online or looking at a PDF. So they'll stay up there throughout the whole process until November.
Great. Thank you, Katie and Daniel, again for all your work on this. I know it's been a lot of time and energy over the course of the summer, so appreciate it. And then also thank you to the Election Commission for their work on it. I know it's important for the city, so thank you all thank you to everyone involved. All right, next up, define catalytic converters as second-hand property. I'm the sponsor of this item, so I'll briefly kind of introduce it, and then I'll turn it over to Trevor Vaughn to see if he has anything to add. This is kind of a follow-up to other ordinances that we've done in this area, and what this would do would basically clarify the definition of catalytic converters as secondhand property and require buyers of that property to report under the secondhand dealer code, similar to what we do for pump. And essentially, it's a deterrent in terms of deterring folks from taking in stealing catalytic converters and also having an easy outlet to dispose of those. There are a couple of differences. This is similar to an ordinance that was run in Denver, but there are a couple of specific differences. The first one is a $30 limit, so anything under $30 is not considered secondhand property. And some of that came from conversations Trevor and his team had with purchasers of catalytic converters. And the other one that I think is, pretty important is an individual that's selling more than one catalytic converter at a time would have to have a business license showing, why they would obtain it. I just don't know that there's a reasonable explanation for why the average resident would have more than one catalytic converter at a time to sell to a secondhand dealer. And so this, if there was a legitimate business purpose for it, obviously though, that business would have their license and they could demonstrate why they have that or why they have multiple catalytic converters. So that's kind of a brief rundown. Trevor, anything you want to add or piggyback on?
Probably just a couple things. We did already approach a couple businesses last year in regards to our interpretation that this is secondhand property. So this does add that clarification plus the provision regarding those that have multiple catalytic converters. And you know, we have one major scrap buyer in Aurora, and I did have a conversation with their CEO about this ordinance, and he didn't have any major concerns about it. They actually stopped buying catalytic converters from walk-ins. They just buy them from business operations anyway. And they do some of the same practices we talk about with some of the other stuff they buy in regards to, like, if somebody shows up with new rolls of copper or something like that and trying to claim that they're a business that just ordered too much, they make them present business information and issue a check to the business. So they are doing some of those responsible good neighbor practices. And this kind of all started with the legislature had Senate Bill 9 that required the record keeping. This just ensures that that record keeping actually gets reported to the leads online, the electronic system that police look at, so that information can be promptly used in analysis, and if there's a VIN etched in the catalytic converter, that would be reported, so that could get connected with a specific crime. And so the state bill only required that the records be kept. They didn't require that it be entered into the system. So that was one of the big reasons Denver ran the ordinance to make sure that would happen and get entered in for that crime reporting. The other, just one piece in here, this came from a few years ago, that I just made a note when we would have the opportunity to clarify that gift cards are secondhand property. So we did post that in there as well. We have enforced gift cards as secondhand property because they contain identifying marks. But we did get some argument a few years ago about that. And so we think just adding that clarification makes it a little cleaner. And then the last thing I would ask of the committee is I would recommend a slight amendment to this ordinance to change value of more than $30 to value of $30 or more, so that it aligns with the other part of the existing secondhand dealer ordinance. So a 1 cent change in that threshold. That's all I would add.
All right, appreciate that, Trevor. Councilmember Murillo, questions or comments?
I don't have any questions or comments at this point.
Councilmember Zvonek?
No, I'm good.
All right, and are both of you okay moving this item forward?
Yep.
Yes.
All right, we will move this forward. Thank you, Trevor. I believe that was our last item. Yep. So let's see. Our next meeting is scheduled for September 27th at 1 o'clock. Terry, will you have an invite sent out for that? And with that, we can go ahead and adjourn. Thanks, everybody, and have a good day.
Thank
Thanks.
you.
Bye-bye.